Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines. Indian markets look all set to extend the longest gaining streak in more than 14 months.
Jet Airways lenders will invite bids for stake sale tomorrow. Interested parties will have time till Tuesday.
Titan says it's going to post strong revenue growth for the fiscal gone by, making it the third straight financial year of healthy top-line growth for the company.
India's largest electric wires and cables maker, Polycab, is looking to raise 1,345 crores through its IPO. That's open for subscription.
All right, let's start with a look at the markets. Yatin is here with us as always. Afternoon.
Good afternoon, Ira. And, again, today is a range-bound session. We have just 20-30 points up on the Nifty. However, the market breadth is quite healthy. 3 advances for every 2 declines. So after a choppy start in trade, we are more or less stabilizing on the advance decline ratio. What's doing well in the market is Cipla. And remember, today morning there was a large block deal post which shares rallied. So we have the likes of Cipla, Tata Steel, Bajaj Finance being the top gainers on the Nifty at this point in time. Metal stocks again are in focus. Tata Steel, JSW Steel doing well in the marketplace. What's not doing well in the market is the PSU banks. A lot of news flows on the IL&FS front, on Videocon front. So in general, PSU banks are weak in trade. So we have SBI, PNB, all of these stocks losing momentum in trade. 2% down for SBI. That stock is the top loser on the Nifty at this point in time. Power Grid, Britannia, Tata Motors also are the stocks wherein we are looking at some profit taking which is happening. Also, the power sector is in focus. Tata Power and Adani Power are up on decent volumes. There is talk in the marketplace that CRC might soon come out with the order for the resolution of the Mundra power plants. So 2.5% up for all of these stocks in trade today.
Athan, thank you for that. Titan, meanwhile, continues to shine with strong growth in the financial year gone by. Similar expectations from the current year as well. In its update for the fourth quarter, the watch to jewelry maker has put out some encouraging commentary. Agam is standing by with some key takeaways on Titan.
Yes, well, the Titan has indicated that they've had a very strong quarter, because of which they are likely to post very steady earnings for the entire financial year, perhaps for the third straight year too. Now, in terms of some of the important factors that stand out in the releases, first of all, they're expecting 21% growth in revenues for FY19, and moreover, they're targeting 20% growth for FY20. They've seen broad-based growth across all divisions, which will include jewelry, which contributes to 83% of the revenues, and that's where they've seen growth come to around 22%, higher than what they had guided for, which stood at around 20%. And once again, it is essentially the collections as the high value studded jewelry along with the wedding collections which have aided growth in this particular segment. Moving on to watches, we've finally started to see some sort of stability when it comes to growth in revenue in watches. This contributes to as much as 13% of your consolidated sales, and once again, it is brands like Titan, Fast Track and Sonata which are aiding the gains. Finally, coming down to a slightly more volatile segment, that's the eyewear segment. That is also where they've started to see an uptick in terms of the number of customers served, which now stands at around 35 lakh against 25 lakhs last year. And they aim for 1 crore customers served in this particular segment by FY23. But on the whole, they've indicated a very strong quarter as well as a financial year. And they're expecting this momentum to continue moving into FY20 as well.
All right, Agam, thanks so much for that. Let's move into Jet Airways. The lenders to Jet Airways will invite bids for the stake that they hold in the airline starting tomorrow, I believe. And they've got a very short timeline within which they hope to get those bids in. Vishwanath Nair joining us with the latest on what's happening in that case. Vishwanath.
Right, Ira. So, State Bank of India released a statement last evening where they said that between the 6th and 9th of April, that's just over 4 days, they will be inviting expressions of interest from interested parties who might want to buy majority stake in Jet Airways. Now, this process is only the initial phase of the entire bidding process. After the EOIs are submitted, there's going to be a data room open where bidders will, look at the financials of Jet Airways, conduct their due diligence, and only then submit a final bid for the airline, which then, of course, gets processed. The lenders have also, in their statement, mentioned very clearly that They are cognizant of the fact that the entire resolution process that the lenders are currently basing their projections on is dependent on the interest shown by bidders interested in Jet Airways. And if there is no interest, then the lenders are willing to take further action. They did not clarify what this further action is, but of course, lenders have multiple, recourse. They can either restructure the debt or go for an IBC proceeding. All of these options are currently still open. We are not entirely sure what the lenders are planning to do. But Jet Airways is is currently in a very critical position. They have about 28 planes left in their fleet, and if that number keeps dropping, then it's possible that the airline might have to get grounded fully, which is an outcome that the lenders want to avoid at all costs. They have not yet disbursed that 1,500 crore debt support that they originally promised on the 25th of March. That is dependent on a lot of things, such as these other investors, Naresh Goyal as well as Etihad, pledging their stake with the lenders, and only after that pledge happens will they disburse the money, because of which the employees and the lessors will get paid and the airline can start flying planes again.
Difficult times. Thanks, Vishwanath, for that. Jet Airways, meanwhile, is being cautious with the summer schedule. The country's oldest private airline has given up nearly 70% of its routes for the next 7 months. That's also that's also only a tentative plan. Samit is here to tell us how, not very encouraging situation for Jet Airways.
Yes, the signs are not at all encouraging, because if you see, usually the summer schedule begins on March 31st and ends on October 26th for all the other airlines. But this time, due to the issues that we have seen related to Jet Airways, DGCA has approved Jet Airways summer schedule only till April 25th. However, we can see some revision coming in for this after this date, but as of now, it's approved only till April 25th. Now, based on that data, if you see, it looks like Jet Airways has pulled out capacity from 174 routes out of the total 252 routes that it operated in the recently concluded winter schedule. Now, however, as this data is available till 25th April, there could be some revisions. So far, it has pulled out of 70%. Now, because of this cut in capacity by Jet Airways, the Tata Group owned Vistara and AirAsia are expected to benefit the most, because if you see, they have deployed nearly 40% of their capacity on those 174 routes. Vistara and AirAsia have deployed nearly 42 and 41, while the other airlines like Air India, Go Air, Indigo and SpiceJet have deployed anything between 27 to 35% of the total capacity on those 174 routes. Now, because of this cut down by Jet Airways that we have seen, the total domestic departures in the summer schedule is expected to increase by only 4% compared to last year, to close to 3,077 departures. Now, this is mainly because of the 76% cut that we are seeing in Jet Airways. And if you see, for other airlines, it has increased. For Indigo, it has increased by around 21% compared to the earlier growth rate of 30%, and that is because the company has now been focusing more on international routes. For SpiceJet, it is expected to increase by 30%, and this is despite the fact that the MAX 737 have been grounded and there have been some supply deliveries coming in for SpiceJet. Despite that, they are expected to grow at 30%, while the other airlines like Vistara, Go Air, AirAsia are expected to grow anything between 15 to 27%, while Air India is expected to grow nearly 8%, and others are expected to grow close to 23% compared to last year.
So how does this new schedule impact some of the big airports?
Now, Jet's cut in capacity has also led to some unused slots in the key airports in India. Now, if you see, for Mumbai, nearly 65 slots have been vacant, and as you can see, 329 was last year, and this time is around 264. Nearly 65 slots have been vacant in Mumbai airport. Now, Indigo slots have increased by only 1, but if you see, for Jet Airways, it has come down from 91 to 24, and majorly because of this, the slots have been vacant in the Mumbai airport. Now, for Delhi airport, if you see, there also nearly 70 slots have been vacant for this summer schedule, and mainly because of Jet Airways, because earlier they had around 100 slots and now they have only 23 in 2019, and that's the reason this has come down for Delhi airport. For Bangalore, however, it has come down by only 8 slots, and that is because Indigo's number of slots have increased in the summer schedule, and that's the reason their slots have Bangalore slots are not that much unused. But ICICI Security believes that this unused slots could be reallocated to other airlines if there's if the Jet Airways debt resolution takes further time. So that one change could come in after April 25th, or we'll have to see how that pans out for the airport companies. As of now, this cut in capacity is expected to increase the ticket prices, and the CEO of Yatra believes that the leisure travelers are not going to see much of an impact of this, because the ticket prices are expected to increase by only 10% on that part, but the business travelers will see much of an impact of this, because that is where the most of the hike of the ticket prices are coming in as of now.
All right, thanks so much for that, Somit. Let's move on. India's largest cable and wires manufacturing company, Polycab, India's 1,345 crore IPO opened for subscription today. The management believes that their manufacturing capabilities will give them a competitive advantage in the market. Yatin Mota caught up with the management. Let's hear them out.
So we are raising 400 crore rupees into the company. Out of 400 crore rupees, 80 crore rupees will be used for repayment of long-term debt. 240 crore rupees will be used to support our growth ambition by supporting the working capital requirement, and the balance 80 crore rupees will be used for general corporate purpose. As of December 2018, our total borrowing, including long-term and short-term, were around 550 crore rupees, which was around 800 crore rupees as of March 18. So we have been able to reduce our debt. On a go-forward basis, we'll continue to reduce our debt with the help of the IPO proceeds as well as with the help of internal accruals, which are generating from the business.
Okay. So probably in a year and a half time, would you be able to be debt-free at this pace? Or you have some significant capex that would probably keep the debt levels and working capital at similar levels since you are expanding in your consumers business?
So as a business, we are generating a lot of cash. With the help of IPO proceeds as well as additional cash which we are generating from the business, we should be able to reduce our debt on a strategic measure over the period. Our objective is to maintain fine balance between the capital allocation which is required for capex and giving values to our stakeholder. Over the period, we want to maximize the returns for the stakeholders.
Okay. Sir, talking about growth avenues, clearly a lot of analysts believe that the consumer business would be a growth driver for you. Expanding presence, you spoke about distribution network, sales network, but what happens to manufacturing? Would you be looking to outsource, because a lot of brands that we see in the marketplace import a lot of stuff from China, label it and sell it under their brand name? How is Polycab really looking at it? Would you be doing a mix of importing and putting your brand on that? Are you looking at expanding your manufacturing facilities significantly, especially for fans and other
I'm so glad you asked this question. In fact, that is a key differentiator for Polycab vis-a-vis all other players in the industry. Well, most of them. In this industry, consumer electricals, usually it is an outsourced model, but I'm very proud to say, even when we were selling 5 lakh fans, we set up a ceiling fan factory for 30 lakh fans per annum. And today we are at a significantly high capacity utilization there. We have the ambition and we have the appetite to invest in manufacturing. We believe manufacturing results in process advantage, quality advantage, cost advantage, innovation advantage, and most importantly, the strategic advantage of having common raw materials. So we have leapfrogged ahead in terms of this industry, in terms of our success, primarily because of own manufacturing. So the fan factory is in Roorkee, the LED lighting factory is in Baroda, we have the switchgear factory in Nashik, we have the switches OEM, which is 100% supplier to us, based in Bhiwandi, and we have the conduit pipe factory in Baroda. So this is a big differentiator, and that is what is giving us an edge in the market.
Management of Polycab. Not many companies took to the markets in financial 19. There were fewer public offerings in the past few years, but how well did the markets receive these new entrants? Yash Upadhyay is standing by with a scorecard.
That's right, Harsha, because we had one of the slowest years for the primary markets in FY19, with only 13 companies going public last year, which is the lowest number since FY15, when we had only 8 companies come out with their IPOs. Of these 13 companies, 8 companies have managed to give positive returns from their issue price. So let's take a look at that. We'll start first with Fine Organics, which is up about 68% from its issue price, along with HDFC, AMC and Aavas Financier up anywhere between 40 to 42%. RITES is up about 37.5%, along with the likes of Credit Access, Chalet Hotels, TCNS Clothing, all gaining anywhere between 27 to 15%. Zelpmoc Design is the only company which has managed to give lower returns than the Nifty, which is up about 6.5%. Moving on, let's also take a look at the factors which are responsible for the moves that we saw in them. We'll start first with Fine Organics, and it is one of the largest oleo-based chemical additive manufacturer in India and one of the very few players globally as well. So there are high entry barriers when it comes to their business model. Their new product launches following their joint venture with Zealandia in the bakery segment, that is seen as a big positive, along with the fact that volumes are seen growing double from the levels that they are currently in the second half of FY20, following the ramp up of the operation at their Ambernath facility, which would increase their capacity by almost 46%. Moving on, when it comes to HDFC AMC, is the largest asset management company in the country with equity assets of more than 1.4 lakh crore rupees as of February 2019. It's had a strong track record with ROEs of more than 40% and a wide distribution network. That added the fact that the lower penetration of the mutual fund industry in the country are some of the key positives that brokerage firms mention in their recent reports. And lastly, let's also take a look at the reasons why Credit Access Grameen did very well, and that is that they, Aavas Financiers, sorry for that matter, and the company says that it's the company's strong asset quality and presence in less competitive segments, along with the focus on expanding their business into newer territories. So almost 92% of their revenues, they come from 4 states, and the company has mentioned that they would use the IPO proceeds in order to expand their operations. That offers a long runway of growth according to a brokerage report. But moving forward, let's also take a look at which were the underperformers last year, and a handful of them. The 5 companies which managed to give negative returns from their issue price, starting first with the recently launched MSTC, along with Garden Reach, Ircon International and Indostar, falling anywhere between 13 to 29%, but the biggest drop seen in Varroc Engineering, down almost 39% from its issue price of 967. What are the factors responsible for this? Well, Varroc Engineering has been a primary casualty in the slowdown in auto sales, both domestic as well as globally. When it comes to global, their key clients, which is Ford and JLR, they have seen issues when it comes to sales in the UK as well as in the China, on the back of which Citi in its recent report had cut down its earnings estimate by as much as 14% over FY19 to FY21. Moving on, what's bothering the likes of Indostar Capital, their AUM growth has slowed down on the 9-month period of FY19. Overall asset quality, while remaining stable, has there has been some stress in the SME book, along with the higher share of real estate portfolio, which accounts for almost 32% of its overall AUM, are some of the key concerns that brokerages highlight. And lastly, when it comes to Ircon International, while brokerages continue to remain bullish even now and have a buy rating with a higher target price, one of the key reasons why the IPO didn't do very well was the fact that it managed to list at a time when the markets were at the peak, and we saw the kind of fall in the markets in the month of August or September, October, because of the IL&FS crisis, and due to the weak market conditions, the IPO didn't do very well.
All right, Yash, thanks so much for that. Let's move on. Unit-linked insurance plans seem to be losing their appeal as investors flock towards mutual funds. Data released by the insurance regulator shows that the net inflow in the first 11 months of FY19 stood at less than 20% of the previous fiscal. Ridhima Saxena now joins us with the data, but also the reason behind the sharp drop. Ridhima.
So if you look at the unit-linked insurance plans data, which Bloomberg Quint got through an RTI query, we can see that incrementally the new business premium that came into ULIPs in the 11 months between April to February 2019 was 790 crore, an 84% drop from 4,942 crore that it came in FY18. In comparison, mutual funds have been getting 6,000 to 8,000 crore investments through the SIP route, and nearly 5.3 lakh crore equity assets were there as of December 2018, and nearly 41% of them had stayed invested for over 24 months. Now, if we when we asked experts the reasons behind that, they said that it is a combination of both a reduction in new premium that is coming towards ULIPs, and also poor investment returns that the companies are getting on the ULIP fund thus created. So as we are already aware, unit-linked insurance plans are a mix of insurance and investment, and a portion of the premium is invested, and that creates a fund on which investment returns are poor, which is very evident in the assets that have marginally declined in, again, April to February 2019 compared to FY18, and the decline shows that it has largely remained flat. Now, the impact of this is likely to be taken the most by private players, as LIC is nearly absent in this space. The biggest hit, if ULIPs continue to underperform, would be ICICI Prudential, followed by HDFC Life and SBI Life, which are second and third to be hit by underperformance of ULIPs.
Ridhima, thanks for that. Trade talks between US and China seem to be progressing, with Xi Jinping pushing for rapid conclusion. China says a new consensus has emerged on what Donald Trump called a monumental agreement. Bloomberg's Derek Wallbank reports.
I think people across Asia woke up this morning worried that there had been some massive backtrack in the U.S.-China trade talks. I don't think that's the case at all, and I think that the subsequent comments that came out from China really illustrate that point. There has been movement toward a trade deal. Xi Jinping was had a message to convey that basically said, look, leadership is needed right now more than ever. We can get this done. There's been progress made, Liu He said, over the last months, and President Trump is at this point, I think, especially coming off North Korea, he is looking to not get into a room for a signing ceremony before there's something to sign, right? So you're not going to see a summit announced between Trump and Xi before there's something ready to go. I would be really surprised if the cart comes before the horse here, just because the president was burned the last time, and so I don't think he wants to go down that road again. But clearly there's been progress that's been made. I think there's a couple of sticking points that are left. It's not done, but we're hearing from the Chinese side that progress was made on parts of the text, and certainly that's a very good sign if you're looking for a deal upcoming. So to recap, there's not quite the here's the signing thing announcement that maybe some expected, but I don't think that this is a problem in any stretch of the word.
All right, it's been roughly 3 years since the UK voted to exit the European Union, but for European leaders, it feels like Brexit talks have been going on forever, and it's making them sick of Brexit. Take a look.
I have something like a Brexit fatigue, you know.
I can understand your tiredness.
No, but because this is a disaster.
There are definitely some countries, particularly those that aren't near to the UK, who are kind of sick of this.
Monsieur Farage, personne à Bruxelles n'est en train de vouloir voler le Brexit et de vouloir détourner le vote du peuple britannique. C'est vous qui faites ce choix et c'est vous qui devez prendre vos responsabilités et faire face aux conséquences de ces décisions. Personne d'autre.
Dazu ist viel zu viel im Fluss. Ich gebe zu, dass ich die Geschäftsordnung des britischen Parlaments aus dem 17. Jahrhundert nicht aktiv präsent hatte und insofern das gestern mit Interesse zur Kenntnis genommen habe.
L'Union européenne ne peut être durablement l'otage de la résolution d'une crise politique au Royaume-Uni.
Eine Sphinx ist ein offenes Buch im Direktvergleich zum britischen Parlament. Eine Sphinx.
Aus derzeitiger Sicht überhaupt keinen Grund für eine Fristerstreckung, denn das Chaos in Großbritannien hat sich nicht verändert.
I've been wondering what that special place in hell looks like for those who promoted Brexit without even a sketch of a plan how to carry it safely.
Out of time on the show. Thank you so much for joining us today.
Thanks for watching.